Good morning. My name is Janice Myers, and I'm the CEO of the Canadian Real Estate Association, and it's my pleasure to bring opening remarks. Thank you for being here on this balmy January morning. So real estate decisions are made one community at a time. Realtors work directly with buyers and sellers across the country, responding to distinct local market needs and opportunities. At the same time, housing has become one of the most closely watched issues in Canada, shaping household decisions, influencing economic confidence, and remaining at the center of public and political debate. Here in Ottawa, we continue to see the federal government focused on economic sovereignty and long-term competitiveness, and those conversations matter. But we also know that for Canadians, the issue that remains most urgent and most personal is housing. Because at the end of the day, Canadians care deeply about having a place to call home, a safe, stable foundation for their families and for the future. Market conditions today are influenced by a variety of factors, including interest rates, affordability, population growth, shifting demographics, and changing housing stock, all interacting in real time. That's why the work that we do at CREA is so critical. We're here to provide evidence, insights, practical solutions, helping decision makers understand what's happening on the ground and advocating for policies that support a healthier, more accessible housing market for all Canadians. Thank you again for joining us today as we present our latest forecast for the Canadian Real Estate Association in 2026. Before we hear from Sean Cathcart, our senior economist, I'd like to invite our chair, Valérie Paquin, to say a few words in French.
Merci Janice. Je m'appelle Valérie Paquin. Je suis la présidente de l'Association canadienne de l'immobilier. Les décisions en matière d'immobilier sont prises à l'échelle locale. Les courtiers et agents immobiliers travaillent directement avec les acheteurs et les vendeurs à travers le pays en tenant compte des besoins et des occasions uniques du marché local. Parallèlement, le logement est devenu l'un des enjeux les plus suivis au Canada. C'est un enjeu qui influence les décisions des ménages, affecte la confiance économique et demeure au centre des débats publics et politiques. Ici, à Ottawa, nous continuons de voir le gouvernement fédéral se concentrer sur la souveraineté économique et la compétitivité à long terme, et ces discussions sont importantes. Cependant, nous savons également que pour les Canadiens, la question la plus urgente et la plus personnelle reste celle du logement. Car en fin de compte, les Canadiens tiennent profondément à avoir un endroit où ils se sentent chez eux, soit un environnement sûr et stable pour leur famille et leur avenir. Les conditions actuelles du marché sont influencées par de divers facteurs, notamment les taux d'intérêt, l'abordabilité, la croissance de la population, l'évolution démographique et le parc immobilier changeant, qui interagissent tous en temps réel. C'est pourquoi le travail que nous accomplissons à l'ACI est si important. Nous sommes là pour fournir des données, des informations et des solutions pratiques, aider les décideurs à comprendre ce qui se passe sur le terrain et préconiser des politiques qui favorisent un marché de l'habitation plus sain, plus accessible pour tous les Canadiens. Nous vous remercions de vous joindre à nous aujourd'hui pour la présentation de nos prévisions les plus récentes pour le marché de l'habitation canadien en 2026. Je donne maintenant la parole à Sean Cathcart.
All right. Morning. Thank you very much, Janice. Thank you, Valerie. Good to be back. Thanks for coming, those of you in the room and online. I'm going to be showing some charts today when I do this presentation. I understand that that's going to be viewable to those of you in the room. If you're online, just get in touch with us through CREA.ca. We can pass this deck along so you can see what I'm talking about. Now, we're here to talk about our forecast for the resale market, in particular for 2026, but we're really talking about a lot more than that. Over the last year, we've really sort of have a merging of some of the bigger housing ecosystem data that we use more on the policy side of things for like how have we evolved over the last 20 years, how do we get into this mess, how do we get out? But you can also look at that same data in a much more narrow sense to say how's that going to affect the market in 2026. So that's what I'm planning to do today and hopefully kill two birds with one stone. But I'm going to start off with interest rates, obviously, is a major factor in our forecast. It was last year, too. And if you were here, you might recall I stood up here and said, we think that first-time buyers are going to come back into the market this year with rates having gone from 6 to basically 4% for a mortgage rate, unless the Trump administration announces 25% blanket tariffs, which they did 5 days later. So sort of took the rug out from under the spring market last year. We did have a rally mid-year, and we expect that to continue in 2026, barring any other major black swan events. We look on the chart here, I've got discounted mortgage rates, aggregated, fixed, and variable for 5 years from our friend Rob McLister. It's not the Bank of Canada's rate. It's not the posted rate that the banks have on their website, which no one actually gets unless you've got a terrible credit score. It's the rate that most lenders are getting and stress tested against. And as you can see, it's basically gone from 6% to about 4%. Variable's a little bit better. Just to give you an idea of the affordability change there, if you had a $500,000 loan, that's the difference between $2,500 a month in interest and $1,600 a month in interest. Still not great, and not as good as some would hope, which might be 3%. But as the Bank of Canada said on October 29th, that's about as good as you're going to get for now. So the Bank of Canada is pretty much done cutting. We think that's an important factor for first-time buyers because many of them have probably been waiting to get the absolute lowest rate possible before locking in. We do definitely think that that is a factor that could bring some off the sidelines this year, despite affordability not being what they might like it to be. I'd like to switch now to some broader housing ecosystem data, which is from StatCan and CMHC. It's what the housing stock looks like and what we're building, and what the households look like who need housing. So very high level. And one of the things you'll know is that population growth is expected to be much slower than it has been due to mostly massive reductions in temporary work and student permits, but also a reduction in our permanent resident targets. And so you can see on the screen here, I've got year-over-year population growth in Canada. And you know, this is the most recent one from, sorry about that, from Canada Day of this year, right back down to pretty much where it's been for decades. And really the aberrant data was 2022 and 2023, 2024. We've just gone back to normal. This is not a headwind for housing, as some have said. It's really just a much more moderate tailwind. Our population is still growing. But under the surface of that 41.6 million people, which is up 4 million from before COVID, by the way, the demographic distribution is changing over a very long period of time. It's called a secular trend, not in the religious sense, but in the non-cyclical, non-periodic. We are aging, and that's been true for 50 years, and it will continue, to the point where now the baby boomers, the Gen Xers, and all the millennials are in middle age all at the same time. And middle-aged people have much higher rates of home ownership. They need a place of their own. Coming up behind them is the Gen Zs, which is another huge cohort. So that's the big picture. The narrow picture for how this could affect the market in 2026 is first-time buyers. So let's look first at 30 to 34-year-olds. That is the largest 5-year cohort of people in Canadian history ever, right now. If you look at the 34 to 39-year-olds or 35 to 39-year-olds, obviously a lot of first-time buyers have been locked out of the market for about 4 years now. So a lot of people who may have bought at 33 to 34 are now going to be re-emerging at 37, 38. That's the next biggest cohort of population in Canadian history. And the younger folks that might buy condos in their late 20s, that's the third largest cohort in Canadian history. So we don't have a database of pent-up demand. Our members do in their phones, and we expect a lot of them to show up later this spring. But we can look at the population and say that there's a lot of people in that cohort that have been sort of like water building up behind a dam over these last 4 years when they couldn't get in, that are going to come back eventually. It's kind of like squeezing the toothpaste tube, you know? Less this year more equals more next year, typically in the housing market. And of course, to anyone that's asking the question, well, maybe, or making the statement that city who want to become homeowners has gone away, and that's why homeownership rates are falling. Not true. Abacus data did some survey polling last year. You know, in that millennial cohort, 75% of non-owners say they still want to buy. If you look at under 30, 86% of them say they do. So the propensity has not gone anywhere. And of course, this has been true for 50 years. The inflow of new households is about 5 or 6 times the outflow of older folks divesting of a home back into the stock. The baby boomers are not at that stage yet, so we've not reached that equilibrium. So we've needed to be building this whole time. So have we? If you look at CMHC data, we're building something like, a 250,000 units a year. But it's not the same 250,000 as the 200,000 we built 20 years ago. It's a very different composition. CMHC data for, I know that if you're not in the room, you can't see this, is very choppy. That's just the nature of completions. If we run it through a trend cycle, it becomes much more clear. And you can see that over time, that we are building a lot more homes now, but we've switched in 20 years, basically the bottom line here is we've switched over the last 20 years from building low density detached homes primarily, all the way through to building mostly apartments without building that missing middle. It's why the term was coined 15 years ago, but the missing is still in the name, right? And that's one of the biggest problems here is that for people in their 30s who are saying, I need something big enough to start a family in, it's just, it doesn't exist. Or it exists in the legacy detached space, which is very expensive. If you take the purpose-built rentals out, we've been building fewer units every year for 20 years. If you take the small condos out, we're down to about, a third of completions are family-sized that you can own. So, and if you, look at the proportion of single detached completions versus apartments, they basically switched places in the last 20 years. So we've shot right through the missing middle, didn't build any of that, and we say we're building this many units, but they're not units that are going to be suitable replacements for the thing we stopped building. And so you end up with a housing stock that looks like that. Lots of single detached homes, lots of apartments, and nothing in the middle. That is our current housing stock. It's actually StatCan data from Q3 of 2025. You can see that most of the apartments are rentals, most of the single detached are ownership. So really, if you're a first-time buyer, the most likely way that you do that is go from a rental apartment to a big detached home. Not a lot of good options in the middle. And the problem is, of course, it's the land that's underneath these things that qualifies it as low density that's gone up in price so much, right? Not the house. They've got a lot of starter homes out there that are sitting on $500,000 worth of land now, so they're not starter properties anymore, right? So we got this missing middle problem. And actually, we had our Hill Days up here, and we were meeting with MPs, and I was just playing around with the data. And it's often been said that this is kind of like missing rungs on a ladder. You can't climb up because the gap is too big. And I thought, if you turn the graph sideways, it actually looks like the metaphor. And so from a policy perspective, over the next 10 years, if we do double construction, we know what we need to build. From a 2026 forecast standpoint, you can have a lot of first-time buyers come off the sidelines, but if all that's out there for them to buy is either too small or too expensive, you're going to have a problem, and you're going to be limited in terms of how many transactions that actually ends up being, right? So if you look at our forecast for our data, this is from 1980 till now, we're expecting a 5.1% increase in sales in 2026. So not a huge increase, but we could get a 10% increase in 1 month if a lot of people come off the sidelines. We're trying to be conservative here because affordability is still going to be a constraint. Supply not being around in big numbers in many parts of the country is a constraint. And supply just generally that's affordable in the housing stock not being around existing is a constraint. And you can see if you look at a long-term trend line, we're way below that. And that's expected to continue because what's growing in the housing stock is mostly, like in a big way, is rental. And so that's not going to play into our data in the resale space. What it means is that stuff that you can own, that people are still striving after, is relatively more and more scarce because we're not building that. But that's what people are still going after. So what happens is it plays out on the price side when more than one sort of young first-time household come to buy the same house. Breaking it out by province, most of the increase in sales this year is expected to be Ontario, BC. That's been our forecast for a long time. They've got a lot of room to recover. They're very low right now, and a lot more supply for people to buy. Whereas other places are more constrained. There's provinces with 20-year lows for supply still, and where sales are still flying pretty high. And there will also be a constraint in some of those smaller provinces because a lot of that reduction in population growth was disproportionately affecting them. Population growth they've never seen holding those markets up in recent years, and that's gone. If you look at the number of months of inventory in Canada, supply has picked up over the last 4 years, but we're only right now at 4.5 months of inventory. The long-term average is 5. We're on the tighter side of balance. And an important consideration this year is if you get a lot of first-time buyers coming back disproportionately, first-time buyers absorb inventory. They don't put another one back on when they sell. So the thing that pulls down inventory quickly is lots of first-time buyers. And so we think that there's a risk, it's not in the forecast right now, there's a risk that this could tighten the market very, very quickly if buyers come in and start absorbing inventory all across the country. We've seen it in the past in Toronto, Vancouver, but if it happens at the national scale, it could we could be back in a seller's market, even conservatively, like by the summer or fall. And lastly, average home price. We're forecasting an increase of 2.8%, a little bit better than inflation. But really it is more like inflation. It's just that there's a structural element that if you have more sales in BC and Ontario, even if prices aren't going up there, that those are more expensive transactions in the millions of dollars that raise the national average. It's compositional. If you look by province, Ontario and BC and Alberta are expected to have the smallest increases, below inflation. Ontario, the lowest of all, no surprise, that's still the coolest market in the country. And all the small provinces are expected to have gains of, sort of 3, 4, 5, 6%, which sounds like a lot, but that's a major slowdown from 6, 7, 8% just last year. And so with that, thanks very much for listening. I guess we'll move on to questions.
I'm
In the
going to
room.
forego the questions here and move along. Hope you'll put your questions, suggestions, and ideas about this in the comments. Like, subscribe, and all that. And we'll see you later. Have a good morning.